What is good, family? We are back. We are back. We are back. Friday video. If you made it to the end of the week, shout out to you, man. This is MC Fire. We are gonna take a look at this beautiful market. Take a look at some setups. There was a um, kind of a let's just put it out there. President passed away. A former president, should I say, Jimmy Carter passed away, and so out of respect, most of the market was closed on Thursday. So today we're going to kind of look at a recap. If you're a day trader, do your thing. A lot of day traders don't really trade on Fridays, but there is still plays in the market for next week. So that's kind of what we're going to take a look at now. What's goofy is is the market is kind of trending down this morning, and so let's take a look. Let's see here. Yeah, man. Love it. All right. Also, thank you for all those who've been giving your feedback on how we can improve the channel, making things a little bigger so everybody can see it. You guys are greatly appreciated. Okay. But this is what we've got as it stands right now. So the cues from that Thursday going into Friday, definitely selling off here. So yeah, it's not necessarily a good look there. Little gap down there. Could fill that. If you're a day trader, could fill that for sure. This trend line as it stands right now, we'll see if it holds. It's kind of being tested currently. So we can look at what that is on the daily and weekly. I went on and threw up here the higher time frame moving averages. So basically, what you see to the left, it's not like a one for one comparison, but it's pretty close. On the left side, we have 8 period exponential and a 21 period simple moving average for the moving average clouds. But here we just have two simples. We have an 8 simple and a 21 simple on the weekly. So it appears close, but it's not perfect. I like this because you can kind of view on this side or on the right side on the daily chart what you have on the left side. Kind of just when I do some back testing, essentially it sets you up for, hey, like where's your best moves happening? Are they right there at the 21? Are they right there at the 8? Kind of get a sniper entry, even though we have a pretty clear system, the IOU system. Then for the trend, there's an outsized candle of some sort, and then you take the trade as it hits your trigger, right? That's where your analysis and your judgment comes in on what type of trade you're going to do, what type of risk you're going to take, and where is your trigger execution to get in, get out, take profits. So that in of itself is pretty powerful, right? We're looking at the cues. This is kind of what I'm talking about. If you saw the setup here and how this setup here, how much in the 8 period moving average does it protrude before it springboards out? Same thing here. How much does it protrude before it springboards out? Right? You're seeing decent or healthy profits. If you'd like take it for 1 or 2 days, ideally we like to say 2 days to 3 weeks for swing trades is ideal, right? Um, so that's kind of what we're looking at. So you've got in combination, like a play here that, yeah, it pulled back. Yes, it's giving you a setup, but this play is kind of in a squeeze and then it springboards out of that, right? You do get a peekaboo to go ahead and enter on the break of that high there. So if you did get in, boom, it fired 3 days, 4 days, 5 days. You made well beyond what you probably expected. But you had two indications. You had the squeeze there, kind of giving you a heads up. You got our setup candle giving you a heads up at the break. Got a trigger. You enter, do what you need to do. We did take this one, which was pretty massive for the follow on. So once this one fired, it'll pull back. We saw another sub candle. Boom! It really fired off. We were in this one. We did not get in this one. But once it fired, it pretty much ran there, and then we pulled out right there. So shout out to us for that. But let's go get into some setups now. The in plays and the ETF hot list evaporated there, which is fine. We kind of have them over here, so we'll take a look at what the majors are going on, and let's see. You got XLK. starting out. Right now, remember, we did take a position in the or we told you guys, hey, there's a heads up position for the XLK. It did push to the upside, reaching that relative high. That's kind of what we were targeting. So if you went on and took that position, awesome, good for you. It hit where you needed it to go. A little heavier. The XLC didn't exactly track the same way. We wanted exposure to the XLC, and as you can see, it kind of petered out. So we'll be looking to take that off here pretty soon, and seeing that it is satisfied our requirements. Right, we don't want to break into this zone here. We want it to go ahead and keep pushing upwards. If it's not going to do that, we'd let it go. It's pretty much that simple. Um, you also have AMD and ASML, right, as some value buys. We've been watching AMD. It's continuing to sell off with the broader market, and I would say with recent trading action, just play the setups as you see them. Right, this market isn't out of the woods yet, considering the Fed chairs meeting on December the 18th. Don't have a short memory. Understand that the market doesn't like to get faked out, so to speak. So if the market is getting faked out, so to speak, it will have throw a tantrum for lack of a better term, right? Evaluations on most companies aren't necessarily how can I put it that bad, right? Earnings have been, still increasing higher than normal. The Mag 7 are making record profits. But the crazy part is Wall Street was not expecting easy money to be delayed, so to speak. So just watch out for that. So value buys and like AMD have the ability to go lower, all the way down to potentially the 3 ATR. And that could be a good place to give me a heads up like, hey, you could get a value buy at 3 ATR and really get a nice cost average in, right? We'd like to be averaging in at the lows, um, kind of trading reverse to buy the dip, short the rips, right? We want that expansion away from the moving average to be as far as it goes, and then we'll take the buy, right? Ideally is what you want ASML. So we'll hop over there to the other value buy. It's already starting to kind of punch ahead there, right? We have ASML down here. It did actually, I think, like pop down there, but it might have been in after hours or before hours trading. So no alert there. But as you can see, ASML did take a slight bounce. It's into the moving average cloud, but it's red and you have a potential setup to the downside. Again, setup to the downside, very similar to what we see uh, like we want to short the rips. So this potential ASML trade, especially with the market being a little heavy, could manifest itself down if it doesn't reverse. Of course, your stop out would be relative highs, pivot highs there, and then your where would you be looking to take profits? It's kind of up to you on this one. You could take first sign of danger, or you could look for the lows, right? That's ideally what I would say there. Again, this isn't financial advice. We're just an educational channel here. But the reality is these tactics have worked time and time again. If you look back a little bit, look at right here. It happened right there at earnings. Green candle rallied, break of the low, stop at the high, right? Make your risk kind of small. Same thing here. New trend, little rally. It broke below that, failed. Boom, right? Rallied and then failed. So in a downtrend, you want to short those rips, short those rallies, so to speak. And in an uptrend, you want to buy the dips, buy those slight opportunities to get in. I know we've been talking about GEVO. We'll kind of cover that really quick. Has since kind of pulled down a lot. So our idea again, when you see a position to take profits, definitely take it. First sign of danger, right? You could be like go up here and target highs, but what's your first sign of danger? Well, if you just look to the left, I know it's kind of hard to see this because it's sold off so much. But your first sign of danger is over here, right? So when we chart our charts, right, higher time frame to lower time frame, left to right. So where am I getting these levels? First sign of danger from the left side of the chart, right? Even though we're zoomed in over here on the right, this line came from the left side of the chart and it applies. So in the trade, get out the trade, take profits, do whatever you need to do. It definitely is very, very applicable, right? You don't want to be the guy sitting there like, oh, it was up and now it's down, right? You want to be able to say, yo, I made the decision at the right time. Speaking of decisions at the right time, XLE definitely made a play on the energy sector here, and then it has since started. It did since play out. Right, got this for a couple weeks here, the XLE, and as it went rotational. When I say rotational, bouncing off support, up and down, not really breaking out, not really trending. So if it's rotating between support and resistance levels pretty regularly, I'll just say it's rotational. Okay, on even on the weekly. So on the weekly, it came down here previously. And so the way you trade the trend, it's still IOU. You identify what trend it is. Well, this is a rotational trend. So if you see red in a rotational trend getting outsized wash to the upside, well, then guess what? I'm going to want to take the trade. That's exactly what we did. It went up for a couple of days and we went on and took that trade, right? Not too shabby, not too shabby at all. SoFi. So as the market gets a little heavy, right? SoFi getting close to its stop out there. So we just got to be mindful on the move and see if it actually breaks the low. It could test and bounce off of that. But I've seen there's been some times when you see this and it works and it just runs. There's sometimes when you see it, it goes up immediately after you get the trigger and then go slightly down and then takes off. So stick to the plan. Like if it stops you out, it stops you out. Very similar to XLC. If it stops you out, that's what it is. It stops you out. But I'd rather stick to the plan unless there is some new technical or new data, right? Like maybe you see a head and shoulders pattern form up. Okay, cool. Then you can say, hey, I've identified a new trend, right? And then the trigger has now told me to get out of the trade. Other than that, there is not a reason to get out of the trade, at least in my humble opinion. At least in my humble opinion. You've got well, we already tapped into XLE. USO. We'll hit USO because that's also in the energy sector. USO actually punching to the upside. Now, remember we talked about USO, told you guys that this was in a wedge. Fundamentals are key, man. If you've got a wedge and it starts to break to the upside, right? This is what potentially can happen. Get a nice gap here, nice follow through there. So not sure how high is the high. The theory is or good rule of thumb is like half the base, expect half the base. So you can see that half the base push to the upside kind of already been accomplished. That's really good. Okay, you get the thrust with the squeeze firing off. You get the moving average cross going golden, and then it just boom, right? So the energy sector kind of fueling that push there, right? United States oil ETF really coming in strong. So if you got that, shout out to you. We're gonna go take a look also at the other plays like UNG, XLU, Comcast. We're gonna take a look at those because they were on the radar for yesterday, right? Or Wednesday, Thursday. Oh, we're also going to take a look at Bitcoin. So let's go take a look at that. Voice. Not that. This. Bitcoin features. All right. Yeah, you see a lot of asset classes are looking a little heavy, not really able to like punch to relative highs, but we're not out of the woods yet, man. They could bounce. This is the kind of a point for decision. I mean, you could see it being right here. Let's go look at it on the let's go look at it here. So Bitcoin after hours, right? Essentially like Thursday bounced off that support level and has rallied. But will that rally be short-lived? If you can see here at the open on the 2-minute chart, immediately selling off there. So it's looking slightly heavy, right? It might go rotational, might go chop for today, and market just kind of waits to see what happens, right? VIX it was low, like in the 15s this week, and now it's as high as 19. So not looking good for the overall market. Fear index is definitely looking a little high, so that's something we got to watch. Light sweet crude, oops, see Yeah, let's throw it in there. Also with the energy sector looking to push. So energy looking pretty bullish there. Look at that. Like sweet crude is doing its thing, right? We did see, so this is something that I told you guys um in previous videos. Just because it's making a descending triangle doesn't mean it has to fail, right? It's still putting in support here, or even resistance in an ascending triangle, right? So you have to wait for the actual trigger. You have to wait for the trigger. And the trigger, you got a golden cross here. You even got a little setup candle, trend green, little setup here. And then you could have took this for a day trade. Not necessarily something that we like to do, but day trading, if we get into it, looking at these in place setups for day trades actually isn't too bad. If you look at it on the day, right, you get that break above and it just kind of runs for the day, right? Really, really strong. This is kind of what you want to see in a very powerful outside trend. You got a nice juicy catalyst with the trend line break. You also get the setup. Then as it breaks above, what's your opportunity to get in? Let's maybe say on a day trade. You could look at the let's crack open this real quick, right? We'll crack open this 2 minute chart. I'll maximize it so you can see everything, right? So ideally, the candles we still do have our setup style candles on the 2 minute chart. So in this regards, you're still looking for the same thing. Let's say you come in here and you're before the market opens or around the market open, because this is essentially a futures contract, right? You see these red candles right here? This is what I'd be looking for. It punches, slight pullback, breaks above, take the buy, stop out at the low, right? It's already in an uptrend. It's above VWAP, and you got green on the 10 minute chart. So essentially, I almost trade it the same way I do with the weekly and the daily. The 10 minutes to green. Why can't I take that buy this way, right? Boom. It's a little bit different for day trading. You have to be a little bit more on the button as regards to the rotation, but it pretty much trends all day. So if you're in here, it pretty much runs. Now, if you look more towards like where it is right now, it is at the open. There is going to be some pulling back. So most of that price action to the upside, bottom left, top right was pre-market, right? So again, it trades a little bit differently, right? Wall Street doesn't like to play nice when we get to play. It is what it is. So it's something we got to watch out for. But yeah, big move. That's why I do sometimes value swing trading over day trading. You could see something like that this candle and be like, oh wow, that made a big move. Yeah, what was it a big move that you could have captured day trading? Maybe, maybe not, right? In here, you would have captured this move off the break of, let's say, the if that was your trigger, break of the trend line or golden cross, whatever it is. For us, it'd be the setup break to the upside. The only problem is we wouldn't be able to get into that because it happened when not outside of regular hours. So what else do we have here? ELV. So let's go take a look at our ELV. Right. Not too bad. A major sell-off, right? There's some setups that we are looking at potentially for reversion to the mean, but there's not a lot of meat on that bone, so we went on and let it fly, even though it did revert back to the 8 period moving average as expected today, right? When you get this break here of essentially this break of this setup candle going the opposite direction, then you're like, okay, yeah, we can potentially take that trade, right? Going down, if you're looking for a buy bias trade, any break above that might be your trigger to get in. But as you can see, it chopped around before it took off. Why? Because you're going against the trend, right? Things are looking down, the momentum is to carry it through until that momentum subsides and accumulates for a new push up. A lot of times it's harder for it to just reverse on a dime like that. So momentum trends, they're extremely important. Just watch out for them. But yeah, ELV definitely did break and did go to the 8 period moving average as expected. Speaking of that, we'll take a look at UNH. So UNH, this might be one that we take off today for a profit, right? We don't want to be in the uptrend for an extended period of time in a downtrend, right? So if we're moving up, right, we have an up position up. we have an up position on currently, and the trend is down. If we have a position to the upside, we've already made our profits. Time to phone home for ET, right? Call it a day, essentially. What we could say there is this is kind of a really good example of using the bad news, using 3 ATR, using your setup, and then the setup in the plan is you take it off at the 8 pair moving average. Even though today is a down red day, the reversion to the mean trade did work out. Why? Because this was already depressed and the momentum was shifting back to the upside on United Health. So this play worked out pretty good. XLK didn't. It just is what it is. Or excuse me, XLC didn't. XLK actually did work. We've got XLRE and some T-Mobile. Right. So not looking too hot for XLRE. Remember, we've been watching a lot of these new trend plays. Like this XLRE is in a new trend. You see the trend line here. You see the green outsized candle there, and then it goes against it for a massive failure. Kind of what you want to see. That's kind of what you want to do, right? Same thing here. Slight push up, but not really a lot of meat on the bone. You're essentially going from here to potentially 3 ATR. That's how I would play. It could go lower, but we're just gonna wait on this puppy to figure out what it wants to do as regards to when it wants to set accumulation, and then we'll make a decision. But yeah, XLRE definitely a good play. It was a good play to the downside, but look out. Even though it's got these setup candles here, from a couple of days ago that follow through to the downside today, because the market is heavy, just watch out for some accumulation and potential reversal, right? You are getting to sometimes you guys can't see it, but I keep mental notes of some of these things. You're getting to support here, so I'll just draw this out for you, right? You're getting to support over here. Not a big line, but essentially it's there that coincides with 3 ATR. So just be mindful of that you are getting to support at around the ATR will intersect. You've got you have got the Nvidia and T-Mobile. Cool. So as you can see, we do have lead contracts at Nvidia. For everybody who's like, oh yeah, it's going to the moon, it's going to break, it's going to run. Yeah, it went up, but guess what? The market still has to say. Just wait for things to come down and pick you up. FOMO doesn't help you, right? Just because Joe Blow, or even if you see us making money on the channel, getting in late and not understanding the play is not it, right? Uh, get your setup, get a nice clean setup, nice clean plan, and then take that. So same thing here, right? As the play ran, right? Let's say a lot of people trade Nvidia, and they might have a bias on Nvidia. This idea that it will have to run up just because it's a name brand doesn't factor forward if you're seeing the opposite happen in the charts, right? You need to look at the charts and what they're telling you. This isn't a necessarily I'm going to break. Why? Break and run. Because if you look to the left, did it break and run or no? The market doesn't like this 151.06. And until it breaks, retests, and then pushes, I cannot in good conscience say, oh yeah, it's just going to run to the upside just because we have a lead contract. Remember, we got the lead contract here. It was more of a reversion to the mean trade. So, or a dip buy and uptrend, excuse me. Sorry. Uh, so if I'm buying a dip buy and an uptrend, then guess what, boys and girls? That's going to be a lot different. Just because I want it to go to the upside doesn't mean it will continue just because I want it to, right? You have to use let the trade tell you what it's going to do. That's really kind of my point. Let the charts tell you what they want to do and not you impose what you need it to do for your position. It's okay to be wrong in this business, but it's not okay to be belligerent. So do not impose your will on the charts because you don't have that much capital. I'm telling you right now. Here we go. So T-Mobile, setting up potentially for a trend change here. You're seeing it happen as it makes some pretty deep pullbacks, right? But as it stands right now it's in an uptrend. So this trigger to trade is valid, right? This trigger that happened here, you could almost say, okay, I missed the first one. I'll put an alert there for the new trend. The markets are looking a little heavy, but if it reverses, this could be a good value buy, especially if it gets above the 217.4 level. If it gets above that 217.3, 217.4 level, then it could definitely push up higher in complete rotation up to 235. Okay, so that could be a nice push to the upside after a very nice pullback in a very long uptrend, right? Um, did break the 21 period moving average, but hey, it's something to watch. Just got to be mindful and see if it gives you another look, another swing at the bat. If it doesn't, it is what it is. SPG, Simon Property Group. With XLE getting hit, I don't think that Simon Property Group, made it out the blocks. It did not, right? So our trigger, we definitely would want to take something like this up to the high here. We got SPY below. Let's go take a look at that really quick. We got SPY below a key level. So Simon Property Group, no trigger, no trade necessarily. You got SPY going below or tapping a danger area there. So we'll go take a look at that. Yeah. And see, as you can see, let's go. We'll bring this to the front of the classroom, right? Downtrend, nice rip, kind of at VWAP as well. Cross below the low, definitely entry for a sell for sure in the morning. This would have been a classic. If I was going to take a day trade, this is exactly what we're looking for, right? You see the double red to the downside. You see a rip from pre-market into VWAP, into the moving average cloud, right? And then wham, it gets absolutely washed. This first green candle opens up this way. Actually, the next one also does the same thing. So look for some heat, man. Just be mindful. There is some heat on the table for sure. In that regards, you also got. We talked about the divergence in EPR. Let's go take a look at that. Did not materialize. The buy divergence did not necessarily materialize as of yet. It could continue its position to the downside. Remember, we had this setup here, the setup candle, and then it did trigger to the downside with a stop at the. I would put my stop at the high there, and then expansion down to the bottom there if you were getting into this play. But yeah, the divergence we kind of bypassed on this because we're like, not quite sure if the play will materialize because you have some unbalanced volume divergence like right here, right? If you see the low here, the pivot low, it is higher than this one, right? So, or this one is higher than, let's say, this one. So going in there, we're like, okay, you're higher than him, but the unbalanced volume is around at the same relative level. If I have to be picky, I'm going to be picky here, right, with divergence. So just something to watch, just something to watch there. Comcast, old company, love that company, not too bad. So Comcast, as you can see, massive sell off for the trend change, and then follow through to the downside. Not really much to concern yourself about there. Didn't show any other candles there. What I did want to note is let's go look back here for a second and look at some rotation, right? This is kind of what we were looking at potentially for a buy. If we saw maybe that, hey, we're getting some buy set up, maybe take it back to the 8-period moving average, but it doesn't look like that's going to materialize either, right? We're kind of at that zone. I'll mark it out for you guys so you can see it, but yeah, you're kind of at that point where it's like, yeah. So it needs to go ahead and make that bounce. If it's going to make that bounce, where could I see it? Because these guys are getting washed, I don't see it, right? I'm hoping to see a potential red candle print down here, and then that would get washed. But if it didn't get engulfed, so it didn't print and it didn't get engulfed. Kind of gotta play a little if then, and if you see something, then do something, right, in those instances. But yeah, XLU moving right along. So XLU, yeah, you got a new downtrend, right? And then you see plenty of green. No major rip, man. And that's really what we want to see. We gotta put meat on the bone. What do I mean by put meat on the bone? If we got price action and it needs to move or it needs to do something, I want to have a good risk to reward ratio, right? When I say meat on the bone, if we are taking this and it breaks to the downside immediately, right? Okay. Meat on the bone means the charts might tell me to that the first sign of danger is right here at 74. Let me zoom in here. I'll zoom in and show you guys. If let's say it breaks below these green candles, these guys, right? Breaks below that. And the first sign of danger, it's what? What's the first price level that we run into for support? You're not going very far, right? You're going from 74.83 down to 73.95. Okay. Essentially a dollar move. Not scoffing at a dollar move at all. What I'm saying is the potential for it to bounce immediately, you're not giving yourself a lot of time in a swing trade. So if you're walking around, you're busy, you're doing stuff, you got to think about the timing and trade execution. If you're putting in your stop or you're putting in take profit down there and it's going to execute automatically, shout out to you. But if you're like me and I get on my phone and I execute it per is, then this is maybe not be enough time. It might open up down here and immediately rally, stuff like that. So just keep that kind of stuff in mind. You have to keep that in mind because your life interferes with the trade. So just give yourself a little cushion when it comes to your ability, your life or whatever. So where would I want potentially the trade to go down? Here. Does it have to do that? Not necessarily. So that's kind of what we're sitting at there. And then you also have a simple fact too that if it's developing accumulation here, like you see the first squeeze candle right here, it means that this downtrend might not be fully built in, right? It didn't actually rip to the downside and then actually give you a nice pullback. It's undecided, kind of at the support level, kind of fighting around. So if you're accumulating, you could just be setting up, taking a nice juicy break for a nice push. Okay, so that's something that you got to keep in mind too. The market doesn't have to do your if then; it could do what it needs to do, and then you act accordingly. Uh, and then we're gonna hit. We've got EIX. Let's take a look at that. So this is kind of more my speed, right? You see this new downtrend develop, right? You don't really get a lot of meat on the bone as regards to a nice healthy rip inside the cloud, but you do get a nice push to the downside. So you're now definitely in what? You're now definitely in a downtrend. You're now definitely in a downtrend. Okay. Now let's say you take this trigger to trade. That is okay. Your 1, 2, 3, 4, right? Definitely gives you your trigger to take a trade. There is a slight pullback into the moving average on the 8 period. So you would obviously stop out at the high, and then there's your nice, juicy, very, very juicy follow through. Very, very good in Edison. If you're tracking back kind of 4 days on that, but yeah, the trigger was there to take the trade to the downside, so you didn't miss that. If you had the system and that was something you're looking at, you did take that trade. You made very healthy profits, man. Um, in the works, we're probably gonna have to make an auto algorithm to like kind of auto trade this stuff so we can catch more of these plays. But yeah, and of course we got to get a lot more capital. But yeah, we're going to. I mean, it works pretty nasty, right? New downtrend. There's a green candle. Stop out at the high. Does it follow through? Very good, right? Very nasty follow through. So it hits 3 ATR easy on the weekly, and you are rolling and taking profits on a day like this, right? So shout out to EIX. I wanted to bring that one to the front of the classroom to showcase, yeah, the system works, but this is a very clear, defined downtrend, right? Now you can get like a rip to the downside with some chop and then and more failure, right? That does happen, but we like to see like here if you're gonna pull back, really pull back into the cloud before you set up to the upside. Let's kind of zoom back a little bit and see what we got there. Um, we got to go before. Yeah, let's see. The first major pivot. I think it's this one. Yeah, it's pretty sure it's this one. Right. So see how even though it pulls back, there's like this accumulation that's happening that might not be setting up on the downtrends. You might just get this is might be the only rip you get, right? Just kind of goes sideways a little bit and then fails. But yeah, this one green candle, I guess you could call that a bounce back or a rip, so to speak. But when you're zoomed in, it doesn't really look like one. Right, this candle right here, outsized when you compare it to this one. Actually, let's zoom in and see. I guess you could call that a rip. Okay, okay. Compared to that large candle, the downside, yeah, I guess you can call that a rip. But yeah, what we like is like multiple days of selling. Got some accumulation here. There's your nice juicy red candle. Break that. That's where you exit. You enter the trade. Stop out at the low there. You could be a two-bar professional, and then it rips in your favor. It's kind of what we're looking for, guys. Man, it doesn't really get any easier than that, right? Really good trade to execute on the upside. But you see the pullback. That's kind of what we want. Pullback. We want meat on the bone. So I'm a little bit picky in my regards. I like because I'm picky, it works for us very, very well, right? You could take this trade and you're not wrong. You have a plan, you have a system, it works. So guys, thank you so very much for joining me, MC Fire. If you guys like what you've been seeing, pretty soon we're going to put all this stuff in training and we're going to send it out to you guys. If you guys are interested in getting like coaching and or let's say for example getting the system, putting that in a nice juicy package for everybody and making it affordable is what we're going to do. So that is coming soon. That is what we're working on. And because the system is an easy, it's probably the easiest, simplest system out there, right? Not a lot of indicators. We got a couple moving averages and our setup candles that we built here. So what's crazy is, yeah, it's simple. And that's really what I found works for people. It's not necessarily people cannot follow. People they see trading, they see the charts like, oh, I could do that. Why do so many people fail? Is because you're not giving people actionable steps in a way to say, hey, the market is telling you what it wants you to do, right? And you decide to take a trade around that. If it works, awesome. If it doesn't, awesome. But you have a plan and you know exactly how that plan works and you can stick to it, right? So, thank you guys so very much. I'm here for you guys. So, if you got anything you want me to talk about or any topic that we got to cover that, let's say, you wanted to see or we missed, please definitely hit me up in the comments. I'm here for you guys. And yeah, let's have some fun. Have a good day and goodbye.